Welcome back for another report on the gold market. Gold's price steadied and even moved higher in the latest daily sessions after the steep losses the precious metal faced during the previous week. Even though the precious metals trading activity has been mostly on the sell side since July, the weeks ahead in October are expected to fuel the gold market with great volatility and trading action as we near the US presidential elections. Not only this, but also other topics related to the gold market will be reviewed in this report as part of our weekly review, adding also a personal opinion. First of all, the latest strengthening of the USD may have provoked the sell-off for gold's price. The strengthening of the USD may have come from the various positive financial data releases during the past week that point to a somewhat improved picture for the US economy. Indicators like the existing home sales, the market manufacturing PMI and the new home sales units figure were higher than previous monthly readings. Yet the initial jobless claims figure may have disappointed traders as it was marginally higher than the previous week's reading. In our opinion, the USD managed to display substantial bullish strength, with the dollar index being lifted to levels previously seen in July. This may be the first sign that the USD is regaining its momentum, and the happening may have a correlated negative impact on precious metals, both gold and silver. Looking forward, gold traders have a lot of important events approaching, which all add up to an exciting current week. From a financial data perspective, the star of the week comes on Friday, with the US employment report for September to be released. Gold's price is expected to come under substantial volatility upon release of the figures, and traders are advised to be cautious, as the event may produce substantial market-moving effects. Also note gold's price activity may continue to be affected after the event heading into Monday's session, as we have seen this happen in the past. Other financial data in the current week include the US final GDP reading for the quarter 2, released on the 30th of September. A very busy day for the US will also be the 1st of October, with the weekly initial jobless claims and the September ISM manufacturing PMI to be released. On a separate note for the same subject, US presidential candidates Donald Trump and Joe Biden will go head-to-head in 3 debates in the following weeks, with the first debate starting during tomorrow's Asian session. We would expect the debate to create volatility for gold, as the event could possibly attract international attention, with many traders looking to take advantage of sudden price movements. In general, the US elections are considered a highly uncertain event among most market participants, especially for the financial markets, including gold's price. Finally, another important matter that could significantly influence gold's price is the talks on a possible new coronavirus relief package in the US. Yesterday, House Democrats announced a new $2.2 trillion stimulus bill as a proposal. Passing this bill from both the Senate and the House of Representatives could take time, and the effect on the market could be felt then. As a conclusion, some analysts strongly believe that due to the steep rise gold's price has seen during the past months, its current correction lower can be considered as a normal occurrence, with many traders taking profits out of the markets. Moving now to the technical analysis and gold's 4-hour chart. Gold is currently trading nearby 1880, and the price action has been nearby that level for the latest 4-hour sessions. In our view, if the buying positions are to increase, then gold could be lifted higher to test the R1 1895 resistance level. The R2 1905 line could be found even higher, as the price activity nearby that price increased from the 21st to the 23rd of September. Thus, we consider it a noticeable price for traders. Our highest level for this report is the R3 1920, and this was tested various times in August and September, thus we could not ignore it. In the opposite direction, if gold's price moves lower, we have the S1 1865, the S2 1850, and the S3 1840 support levels noted. We would give special emphasis on the S1 1865 support level, as trading activity nearby that level increased during the past week and yesterday, implying that traders have taken it in mind. Also, our S2 1850 support level is significant, as it has been tested in the past days, making it the lowest level reached so far in September. The RSI indicator below our chart is currently aiming for the 70 level, possibly confirming the bulls are in charge for now. That should sum it up for the day. From all of us here at IronFX, best wishes for solid trading.